Welcome, everyone. So today we're diving into a key question for the future of tokenized markets: how to scale fast while keeping compliance intact. As you all know, the tokenization market is targeted to reach trillions, yet there's a fundamental infrastructure gap that needs to be addressed. So today we're very excited to sit with our industry leaders here to unveil the T-Rex network, which has been established to address just that. So before we begin, kindly tell us who you are, what you do, and why this matters to you. So perhaps Joachim first?
Yeah, so I'm Joachim. I'm the head of blockchain at Apex Group. I'm also the chief blockchain officer at Tokeny. I've been working on standardization of real-world assets for the last 8 years. I'm the main contributor to ERC-3643, which is called the T-Rex protocol, which is the reason why the network is called T-Rex.
And I'm Daniel Coheur. I'm global head of digital assets for Apex Group. I'm a co-founder of Tokeny. I've been in the space for 9 years now. Previous to that, I was working at clearstream banking. I spent around 10 years in traditional banking, 10 years in other market infrastructure and telco, and then started my own venture fund and started to invest in startup, fintech. So this is how I met Joachim, and we've been working together for the last 9 years and building the standard for the market, and now moving to the next step.
Perfect.
And I'm Dennis O'Connell. I'm president of the ERC-3643 Association. I'm also a strategic advisor to DTCC, and I'm CTO and partner at PhD Digital. And I'm so happy to be joined with three of my absolute favorite people, but two very old friends indeed, who are each brilliant in their own right. So I'm looking forward to today's conversation.
And I'm Serena, and I lead Artery Tokenization and also chain partnerships at Polygon Labs. And prior to Polygon, I was in traditional finance for close to 10 years in Standard Chartered doing FX sales and trading and security services. And I think why today T-Rex network really matters to Polygon Labs is because we share the same vision. Because Polygon is a go-to blockchain for global payments, and we share the same vision as T-Rex network to move trillions worth of value across the globe at scale and with security. So before we dig into the details, let's start with the basics. Why are institutions even trying to put real-world assets on-chain? So first question goes to Daniel. From institutions that you work with, why are asset issuers, service providers even exploring tokenization today?
Well, obviously, if we look at the typical client base of Apex, what they're first looking for is expanding distribution capability and trying to bring liquidity to the clients. They look at the blockchain infrastructure as the next generation capital market infrastructure that can bring that value proposition to the clients. Of course, they're also looking at cost savings, and they look at this infrastructure as a mean to standardize, to bring efficiencies that will mechanically lead to cost reduction. But that's not their main objective. Main objective is indeed expanding distribution capability and create liquidity for the clients.
Understood. Dennis, zooming out a bit across the ecosystem, so what has changed in the last few years that made tokenization go from being an interesting experiment to something institutional feel like they should take seriously?
Yeah, I think when we started with ERC-3643 3 years ago, I think one of the inflection points was when we made the EIP final status. That was a huge break in terms of a lot of the groundwork that Tokeny had done at the time. And I think when I look 3 years ago, tokenization was something of a nice to have, curious to have. Crypto kind of dominated the narrative, but people would project out where volume would come from, where transaction would come from, and they knew early on, hey, we need to get these assets on chain, whatever that looks like. And there are different approaches. And so as standards start to become more prevalent, and a lot of the work that Danielle's done and myself has done around the world, 23 different jurisdictions, we started to get more and more clarity on this, and that then spawned more pilot projects, and really started to give more confidence that, hey, wait a second, tokenization across a variety of asset classes is quite serious, and across different chains. And then I think that kind of standardization and institutional adoption of the pilots, kind of evangelizing a lot of institutional banks, and then ultimately a lot of engagement by the blockchains. I think Polygon has absolutely been a leader in engaging institutions, as you know, and they did a fantastic job of penetrating institutions. And so that conversation began to mature and then accelerated globally with that clarity. And then now, especially in 2025, with the friendly regulator in the U.S. and a lot of the work we've done with Germany, the EWPG and others, has given it much more of a serious confidence to now tokenization is no longer a nice to have. It's no longer kind of a main track. It's now the canonical way that institutions are looking at blockchain, even past and beyond crypto, and that's only going to accelerate as more stablecoins come out, more infrastructure comes out, and this sort of thing. As 3643 has been a common denominator across those different rails.
Certainly. And Joachim, when tokenization works the way it's supposed to, what becomes possible that simply isn't today?
When tokenization is done properly, actually, it enables a lot of things. So tokenization is just the starting point. When it's done the right way, it means that you can have the native representation of the asset which sits on chain. And then you automate all the compliance part. That's why we created ERC-3643. So you have all this compliance framework, which is living on chain and which is enforced by the smart contracts on chain. And once you have that in place, it enables new venues for liquidity, potentially lending facilities, borrowing power for the asset owners, transferability as such, like a lot of these assets that we are tokenizing, especially at Apex, are assets that are completely illiquid. Mm-hmm. So you see a lot of people tokenizing stocks right now. Tokenizing stocks is a good start, but stock markets are already quite performant in general. Tokenizing these illiquid assets that are very hard to transfer in the traditional world, mm-hmm. That's also a very important part in what we do.
Understood. So I think we're very clear that the incentives are clear, the demand is real, and to be honest, the technology for tokenization is already here. So which brings us to the hardest part. So why hasn't this scaled yet? So back to Joachim again. So let's start with the fundamentals. So what's the core challenge for institutions looking for in tokenized securities? How is this challenge being addressed?
Yeah, so the main challenge first, in my opinion, is that a lot of people have seen tokenization as a new type of asset. It's the same asset, it's the same rules, and actually that's what we have been pushing with ERC-3643 since the start. We have been pushing for having the same exact rules that are applied on chain as it would be on traditional securities, which is not like you have some other ways to do it, which would allow you to take some loopholes and to try to make it a different way. No, we have been saying since the start that these are securities and the securities rules are applied. And actually that's following also the statement from the SEC chair very recently that said, tokenization is the right way to do it, but you have to comply to the rules that have been put in place for these assets since the start. And you have also to deal with the players, the actors that have been trusted for that in the traditional market, such as TAs. So that's what we are building with T-Rex network. We are creating this infrastructure for traditional players such as TAs to plug into it and have all the tools that they need to administrate the assets and to enforce the compliance. And after that, you unlock everything else. You unlock the liquidity, you unlock the composability and everything that we want to happen.
Understood. And Daniel, from the institution's perspective, what are the main blockers that are blocking them from moving on chain?
Well, I think that Joachim mentioned it, right? People were considering that tokenization was a product. In reality, tokenization is a feature. right? You bring tokenization on existing assets, and you enable those assets once represented on chain to be put into action, and feed third-party application that will deliver the expected value. So from our perspective, what was missing is, of course, standards. That's why we build the ERC-3643. You cannot achieve critical mass if you don't have obviously a standard on which you can build, and everyone would agree that we are following the same principle, guidelines, and rules. And then, of course, you need to have the infrastructure that are supporting, as Joachim said, this industry to be capable of servicing those assets or the representation of the asset on that new infrastructure. Funny enough, I remember a couple of months ago, I was in Dubai. We were presenting at an event with other tokenization platform, and they all made their speech. And at the end of the presentation, I made mine, and I asked all those guys, "Do you know what a transfer agent is?" They had no clue, right? One is to understand that if you deal with regulated instruments, you always have a transfer agent that is appointed by the issuer to service those assets. If the transfer agent does not have the capability to service those assets once represented on chain, that's it. Then you can be a GP, you can come and ask for your assets to be tokenized, and you have maybe an investor base. If the third-party provider that is servicing that asset does not have such a capability, then it's not going to work. So I think a lot of the thing that we've been doing since we've been acquired by Apex is to bring that capability across all the platforms that are used to service those assets. So transfer agency, fund accounting, onboarding, digital onboarding. So you bring that capability. That's not trivial. We're talking about a fundamental shift in the way that those TA are working and servicing those assets. So it takes time. This is an infrastructure play. Now, we're dealing with regulated instruments. We're not dealing with instruments that are, currency that can be traded freely on crypto platforms. We had to follow a path to bring that capability, to this market, and now we are ready, I believe, to scale. But we have to look at infrastructure as probably the most important thing that obviously will be used in order to deliver that value to the market. So infrastructure is essential. So how do you bring that infrastructure at the level that is required by all the players to be that trusted environment where they can bring what is the most precious things for them, which is those assets that they're servicing on blockchain technology. So that is something that is happening. That is something that obviously started a few years ago already. And we are now ready to service those assets, and we are ready to scale on infrastructure that will be adopted by the rest of the community so that we can build the critical mass that the market is expecting.
Great. And I think it's also for all three of you here with Apex, T-Rex, and also ERC 3643 association is to do a lot of education for people who is in the traditional finance industry. This is still could be a little bit of a rocket science that they need to learn, but I think we're on track. And Dennis, from the ERC 3643 association's perspective, you've worked with over 140 industry players. So while the token standard solves the on-chain compliance issue, but what are the pain points you hear the most from institutions in scaling tokenized securities? Yeah,
so having 140 institutions and the diversity that we have the opportunity to work with a lot of regulators. Our work with the SEC and the Crypto Task Force has been extremely productive. We, on any given week, talk with dozens of members, working groups, regulators. So it's a living, breathing thing. So we're always getting fresh intelligence, fresh information on the pain points. There's some things about blockchain architecture, like the off-chain to on-chain connection that always comes up. How do you deal with different wallet technologies or self-custody, or are you guys custodied with MPC? And we say 3643 actually is self-custody. It's able to deal with a variety of custody models, and even if someone deals with an issue off-chain, we're able to deal with it. Another pain point we have is we're seeing a lot of change in identity and in privacy. And being a living, breathing standard, we're constantly looking at on-chain ID, which actually is a very successful decentralized identity. I think it's 9 billion is what we have out there for use. And in terms of decentralized identities, it's amazing to see. And and that has been a key factor for 3643's success, and we're continuing to see some really good evolutions on that. Privacy as well as a big thing. We've seen a lot of our members do privacy solutions, Applied Blockchain, Zama, and others to mention that we're seeing a lot more on those payment points. Another one that always comes up is corporate actions, right? Should we have different, specific functions? And one thing we're very proud of ERC 3643 is that we have 5 different implementations across, multiple different EVM, Move, Stylus, Solana, ones I can't talk about, but all of them approach corporate actions in a different way. And I think the strength of the standard is that it doesn't have an opinion on specific corporate actions. It captures the axioms, the fundamental functions around the token control very well, and you can effectively distill down most corporate actions to the existing functions. The last one that we're extremely proud of, that we're working with in Spain on ISO, here in the U.S. With NIST and others, is we are the only open standard ever recognized by a SEC regulator, and we are on a trajectory that is unprecedented of originating from an open standard to actually becoming a bona fide financial standard. This is something where I was this morning even on with World Bank and BIS on talking about with their environmental group. This is something we talk to governments about. What is the impact? We talk to different standards bodies about, but how is it appropriate? What type of standard is 3643? How do you codify something like that? And I think that's something that we're on the cutting edge of in terms of going from an open source standard, open standard to a full financial global standard.
And to add, in order for tokenized assets to scale, we need reliable digital cash for settlement liquidity. Historically, low stablecoin adoption has probably limited the growth. But now, for instance, in Polygon, we processed over 780 billion worth in stablecoin transfer volume last year. So we can see the hardware infrastructure play is finally here in its prime era. So far we've talked about why institutions are pushing forward for tokenization and why compliance has been such a blocker. So what brings us together today is there's now a concrete step being taken to address all these. Joachim, can you share what T-Rex Network is announcing and who you're partnering with?
Yes, so the T-Rex Network, today we announced the partnership with Polygon Labs to build together the infrastructure for tokenization, the next step for tokenization, basically. So the point really is to create this interoperability and reconciliation ledger because you can see that a lot of chains are popping up here and there about RWA and about chains that are doing a bit of everything. And I don't think that any institution wants to be there and just pick the winners right now. They don't know actually. They may want to deploy tokens on one chain right now, and then maybe the next year it will be another one. So the point is that they want these assets to be able to flow from one chain to the other, and that's basically what the T-Rex network is supposed to solve. So we are not there to compete with these chains. We are there to complement the chains and to bring this compliance and reconciliation ledger on top of the other chains, and to be the point of reference where if you want to make a transfer on whatever other chain, you are going to ask basically on the T-Rex network for a validation of compliance, and then you are going to consume that validation of compliance on any other chain. And when the transfer has settled on the other chain, it's going to be reconciliated on the reference chain, on the T-Rex chain. So that's how we can make sure that you have always the full view on everything that has happened on every chain on one single infrastructure, so that transfer agents or asset managers can plug into that infrastructure, and they don't even need to integrate all the other chains. These chains can be used for distribution, for bringing liquidity or whatever else. But when it comes to controlling the asset and ensuring the compliance, That's going to happen on the T-Rex ledger. And that's what the T-Rex ledger is bringing to the table.
And I think, can you share a little bit with us about the T-Rex App Store?
Yes, so the T-Rex App Store is the second part of it. So we have the ledger itself, and on top of the ledger, we are going to create this App Store with curated apps that are vetted by the participant of the T-Rex network, which are going to allow anyone using the network to use these apps as different tools. So you will have, for example, an app to deploy T-Rex tokens in a few clicks. You will have an app to manage the identity part, as well for the asset identities, so the kind of identities on which you can publish metadata about the asset, such as NAV claim, ISIN code, LEI, whatever else data you want to have about the asset, the identities of the investors, the users, corporate identities for publishing KYC, KYB to make sure that the users are eligible for investing in an asset. Then we have the apps about distribution. So we have Dino. Dino stands for Distribution Network. So we have Dino Primary for the primary market, subscription redemption, automated by smart contracts, and relying on data coming from the asset ID. So everything is interconnected. Then we have the Dino Secondary, which is for secondary market, with basically an on-chain order book on which investors can publish intents of buying and selling assets, and another investor can come and match them. So it's some kind of a DVP without a counterpart. Like the counterpart is the one that comes and match this order, and then you have an atomic settlement. So all these kind of apps, and we have much more actually that we are currently working on, such as an app for structured nodes or other type of assets. So really super exciting.
Yeah, I think we'll keep the secret until later for what you have in store in the App Store. So we at Polygon Labs are very excited to be the launching strategic partner of T-Rex Network. And we believe T-Rex Network really fills the critical gap in being the compliant institutional layer of RWAs. And as Joachim and Daniel mentioned, like, it's very important because you're not competing with other chain, but enabling a larger tokenization ecosystem. And that actually links very good with Polygon's interoperability layer, because our vision is to enable cross-chain messaging and also liquidity, but while the chains can maintain your own sovereignty and also control. So it's more like an internet for money. So we're creating the fundamentals for the future. And good to mention that T-Rex Ledger is built on Polygon CDK, so you are able to use institutional customization, high throughput at low cost, whilst having that really good enhanced security. I know Dennis is also very familiar with CDK, so I'm sure he'll agree with me.
Yep, big fan of it.
Yeah, and I think like T-Rex Ledger shows an industry-led standard can be paired with shared infrastructure. So this gives institutions both regulatory clarity and access to cross-chain liquidity. So we're excited to see what's ahead. Okay, Daniel, back to you. So from an institutional service provider's perspective, how does T-Rex change the game for transfer agents, custodians, and asset managers?
Well, in a world where obviously we are dealing with the global village, trust is very important, right? How do you ensure that you're dealing with the right party? How do you ensure that the assets that you will be trading is the right assets? How do you ensure that if you have any element of compliance, for example, if you deal with a private asset in the US, you have a number of investors that you need to obviously monitor to make sure you don't exceed that numbers of investors. So there are a lot of rules, and convention in this industry that we need to respect. As an asset servicer, we are mandated by our client to make sure that we're respecting all those rules. When you deal on an infrastructure that is distributed in this global village, it's hard to enforce those rules and make sure that you are dealing with trusted counterparty. So having this infrastructure that will be used as the golden copy, as the first-hand information that will broadcast that information to the different chain, to the different liquidity providers, to the different apps, to make sure that everyone is operating into this trust environment without, as you mentioned earlier about vetting those apps, without letting the data being accessed by the app that's going to use and abuse that information for obviously bad intention. With bad intention. So if you bring that level of trust on this infrastructure, you unlock, the decision from the big guys, the financial institutions that are eager to bring their assets on this infrastructure, but were reluctant to do that because they didn't have that level of trust that was needed in order to make that move. So you unlock those decisions, right? I think that everyone has been in this industry for too long, waiting for next year. Next year is going to be the year. And we all question, why is it not happening? No, we have the assets, we have the buy side, we have the sell side, but on which infrastructure are we going to make that happen? And this is no judgment on the other infrastructure, but I don't think that those infrastructures had compliance in their DNA. They were not built with that in mind, right? It's true that most of the other infrastructure are looking for TVL. They are looking for evidence to demonstrate to the world that it's happening. While we look at compliance first. So this is an infrastructure that is purpose built for TA to bring that compliance, that privacy, what those institutions need. So we believe that such an infrastructure will unlock those decisions and will bring this level of trust and confidence that is required to really start scaling this industry.
And I think a closing question for all of our panelists, so try not to overlap with each other's answers. So why is this the right moment for T-Rex Network? And what do you expect to happen in the hardware industry? So Dennis, you can go first.
Oh, happy to. I mean, we're extremely excited about T-Rex Network. We conceptualized T-Rex Network almost 2 years ago when with the association we had so many institutions coming, but for every one institution we had 12 individuals, builders, just wanted to get involved. And there is a massive ecosystem that is organic, real, and active, that was really demanding a space, a place, and a chain to capture that ecosystem on. And we looked at 3643 as, okay, this is the suit and tie kind of sort of the standard, and then T-Rex is sort of like the t-shirt kind of accessible, and where the guys have taken it now to it is going to be the reference chain for ERC 3643. It's going to be a compliance first chain built with best-in-class technology, and it's going to be the central node in the fragmented liquidity of ERC 3643, which over 35 billion in assets across all these different chains, public and private. There's going to be no better place for compliant institutions, for the App Store around 3643, and apps that utilize 3643 as well in one form or another. And so we're incredibly excited to launch this and have Joachim, who is the author of ERC 3643, lead the way on it, and create a really thriving community, which he has done an amazing job building, and we really see it. So the future for ERC 3643 is going to be the reference chain for all of ERC 3643 on chain. It's going to help align all fragmented liquidity across these different chains. It's going to be fit for purpose for institutions. It's going to be a great place for innovation, and adoption is a great place to run 3643 and other compliant applications. And so it's got a very bright future and a bright community. Why now? There is something that really changed in the last year is regulatory clarity. It started with the Genius Act, so clarity around stablecoin, and obviously we were missing a stablecoin because without the cash leg being represented on chain, you only deliver half of the equation, right? So we needed stablecoin. Now we have proper regulatory clarity for that. And of course, you mentioned it earlier, Joachim, the statement of the SEC to say, you know what, now you can use blockchain to create a native representation of your assets, as long as indeed you use third-party providers that are capable of enforcing control and compliance. This is what we've been working on for the last 8 years. We have that. It's open source. It's carried by the industry. So this is there, right? I think what was missing is a movement from the industry to achieve scale.
And that's why this initiative, I don't think we mentioned it, is not something that is carried by the association. It's not something that is carried by Apex. It's something that we're bringing to the industry as a collaborative solution. We are inviting other TA to join this, to operate on this infrastructure, and to define what are the golden rules, what is the governance that is required for those large institutions to make use of that infrastructure. So, and by inviting, this industry to collaborate, we believe that we can achieve the scale that is required to deliver the value of decentralization. Once again, I insist, we're not doing digitalization, we're doing decentralization. We need enough scale to bring the power of decentralization and put that data into action, those assets into action, and deliver the value that investors are expecting, right? So I think this is the right time because now we have regulatory clarity, and this is the right moment for this industry to wake up, to team up, and to succeed.
Joachim?
Yeah, so why no? I think that Denise and Daniel answered already quite well, but on a technology perspective, I think that we are finally ready as well. Like, we have been working on that for the last 8 years. We are the OGs of tokenization, basically. So a lot of people are jumping in the train now, and it's fair because you see that it's a big deal. Everyone speaks about RWA tokenization. We've been there when no one was even speaking about RWA. This acronym appeared 3-4 years ago.
Didn't exist.
Yeah, it didn't exist. So we've been building that since the start. Being too early, sometimes it sounds like it's not even the right thing that you are doing, that you feel like you are doing a mistake, but actually we were just too early. But it gave us the time to create all this infrastructure, to create all these smart contracts, all this technology. Now we have the ERC 3643 itself. We have the chain technology, the ZK proving, which is also a big piece on which Polygon has been participating a lot for the industry. We have FHE now with Zama, for example, which is one of our partners to bring confidentiality on public networks. All of that is aligning together to create the full stack that we were missing. And AgLayer, for example, from Polygon as well, to have this connectivity between chains. All these things didn't exist 5 or 8 years ago when we started. Now everything is there. And at the same time, you have this push from the whole industry to tokenize, finally. So I think that's the right time to do it.
Yeah, I agree. And I think for why now, I can share a very interesting conversation I had with a client earlier this week. Because, Polygon is launching the open money stack. We acquired CoinMe and also Sequence Wallet. So we do on-ramp and off-ramp. And an institutional client asked me, how I can on-ramp and then I can also earn as well with all these odd rates. Why do I need to off-ramp? So that's, that people are actually maturing. There's no need to take money so-called off-chain, on-chain, because this should be the new capital markets. So I think we've covered a lot today. And T-Rex is the orchestration layer that brings the tokenization ecosystem to bring it to scale in a secured and also extensive way. For what we are going to achieve in the future is we'll build this ecosystem with all the partners hand in hand with ERC 3643 Association, Apex, T-Rex, and all the partners that we are about to announce. We'll build the foundation for the future of on-chain capital markets. So thank you all for joining us today.